Welcome back to Trading Wars. This is part 2 of my professional Fibonacci trading course. And today we're going to get into the micro and macro look at Fibonacci's, looking at Fibonacci's on all different time frames, and as well as how to implement time frame alignment with Fibonacci's. Okay, so to get started, the main point of this video is that Fibonacci's occur on all time frames. They occur in the macro and in the micro, meaning that on a 5-minute chart, on a 1-minute chart, you're going to see it. And then when you go all the way up to the weeklies and the monthlies charts, you're going to see them as well. Okay. So it's our job as traders to identify where they are and to take advantage of them in a way that we manage our risk. Okay. So let's start off with the micro. So I have the SPY here pulled up and we're on a 5-minute chart. And normally on every day, we're going to have 2 pushes for fibs, and we're going to have the opposing. Okay, so we're going to have 2 pushes and an opposing, and I want you guys to remember that this is a normal day in the market. So the first push in the market will have a mini Fibonacci retracement that can trade to targets, and then it'll have a bigger picture later afternoon Fibonacci that can also trade to targets. They don't have to trade to targets, but they have to come in a micro level first and then a macro bigger picture. Okay, so what I mean by that is let's drill into this chart and look at it. So if we look at November 6th, we had a gap up. We had this initial selling. Okay, this initial selling was met by a rally. And initially, when someone looks at this chart, they might say, hey, this is a great opportunity to go long. The bulls are in control. But if you were to draw the Fibonacci, you would see a completely different picture, right? This is the 618 retracement. So we can see that this impulsive leg, so here's our impulsive leg down, here's our pullback, and here's our trade to our extension. So the 10%, 272 to 382. Okay, so this is what I like to call the first push of the market. Okay, so now if we look after this morning session has set up, so between 9:30 usually to around noon, we'll have that first leg, and then we'll have the afternoon leg. And in a typical trending context, the afternoon leg will pull back in to the bigger Fibonacci setup and offer areas of trend continuation. And we can see that clearly here. We take the fib now. So our first anchor point was here, right? But now let's take the bigger fib. So the full day up to the pullback, right? So this is around noon. So the first leg is done. So A, B, C, right? So impulsive leg, retracement, extension. Now we have the bigger retracement. Okay, so now this bigger retracement, we have the now we can look at this as the same thing. So this is the A leg, the B leg pulls back into the 618, and then we fall straight down into the close, hitting all of the targets below. Okay, so that's what I mean by 2 phases of Fibonacci's in the market. Okay, and we also have to look for the opposing. So as these first leg is trading, if you can see closely, you can see an attempt for the long leg, right? And if we take this fib from here to here, we can see that. We can see the 786 tried to be that point for the bulls to take the next leg. Instead, it breaks, right? And we can see it down here. We had a very, very tiny little Fibonacci long leg that's set up. So we can take it from that low to this swing high. We got the 786 tagged again, and this one traded to all the extensions. So when you first look at this chart, you may not see that there are so many fibs in play, but there are many. And this is the whole point of this video, is to show you guys that you need to be able to identify these fibs, and they only come through time and practice. Okay, so let's go through that again. So we had the first leg down. So this is what we call the first impulsive leg in the morning, the retracement, the extension. Then we had the bigger macro full leg retracement extension. Okay, and while that was all happening, we had these reversal opposing fibs. We had this bull try, we had this bull try, okay? But if you are a professional and if you're really good, you can make money on all these legs, okay? So let's walk through how you could do that. So you take the first short, you have this first leg from here to here. We can enter here at the 618. We can take targets at the 382, done, okay? Now, because the opposing leg, you know it's counter trend, you can take the pull at the 786 and we can take it back to the 236. Okay, so that's short money, long money. Now here, because this is later in the day, this is around noon, we can make the assumption that this might be the low of the day if we don't see this rest of this here. So with that assumption, what we can do is we can go for the 786 to these extensions. And then when we get back up into the zone, you get to see the price action that confirming that the short is still in play. And look at these wicks at the 618. Look at these reversal signs. So it's also very, very good to read the price action at these reversals. Take your time, draw the fibs, and look at your price action at these reversals. Okay. And then one more thing I want to point out, which we're not going to have, I'm going to have to do in another video, but within these candlesticks, there are Fibonacci's playing out. As above, so below. Within each one of these candlesticks, there are Fibonacci playing out. Okay, so let's take this doji. Okay, we take the retracement, a very, very small one of this doji. You could see that this 618 zone is where we reverse. So if you're really, really aggressive, you can play just the candle. And I like doing that candle style of playing on higher time frames. So if we get a weekly bar, we can play a weekly bar like that. Okay, so this is the micro. Okay, now let's go back to our topics. So the next one is the macro. So how do we apply Fibonacci to higher time frames? Well, I'm on the weekly chart here for the SPX, and I wanted to show you guys how you can use this on the weeklies, and I also want to talk about time frame alignment. Okay, so time frame alignment is also very important. But let's zoom out. We can see that this market is in an uptrend very clearly, right? So the first thing that I want to do is we had this pivot down here, this double bottom. So I'm going to take it from the fib here up to the coronavirus level, which is right around here. And then you could see it was not perfect, but once we got into the zone from the 618 down to here, this was amazing opportunities to load up long. All right. So that's how you can use it on the bigger time frames. But what I want to point your attention to the most is how clean it's been in this last basically 2 months. Okay. So let's look at this chart together. So back on September, we had this impulsive leg down. We can clearly see a big push, right? And then now if we take the fib from the high to the low, we get a nice 886 rejection. And then that trades back down to where? Let's see. If we take the opposing for the long, we trade back down to the 886 as well. So imagine if you're just taking these plays at the 886 level with a stop right above the swing high, right? So something like this. Okay, this would be an example of a trading plan, which I'm going to talk about in future videos. So we can do a trade like this. 886, stop above the swing high, and look at that return, right? So let's just say you want to go back to the 236 to be mechanical. That's 5.5 times your money, okay? So that's how you can use it on the higher time frames. So it doesn't matter if you're on the weekly, if you're on the daily, there's so many opportunities. Let's also talk about how we can use the Fibonacci's on the candles. So when you're using Fibonacci on candles, they're not going to work all the time, but it gives you good risk to reward when they do work. So let's look at this start of the coronavirus drop when we had this big red bar. Some people might be looking at this wick here and, not sure why would the market rally all the way up here? Why would that happen? Well, let's use the fibs to explain that. So let's go from swing high to swing low. So the 618 is the money spot. So we know over here that all of this is just a retracement on a lower time frame to continue the trend. And the new trend was that big drop, right? So this is how you can use it on candles. So we could short right on the 618, stop above the swing high like so. We can go for, back down to the 618 extension right there. That's 3 times your money. Okay. So you can use it on the candles, you can use it on the higher time frames. You know, it's happening on the micro and the macro level. And now the last thing I wanted to talk about was time frame alignment. Okay. So this is how you make a lot of money, by using the bigger picture fibs, drilling down onto a lower time frame and finding precise entry spots. Okay. So let's draw this short again. So let's say we didn't know at the time that this was going to be where the market flipped. So how would it have looked? Well, it would have looked like this. I would have had our 886. So now let's go down to the hourly. Okay. So on an hourly, how does that look? So our swing high was up here and our swing low was down here. Let me fix this like so. Okay. So now let's say our strategy is, you know, we're waiting for the 886. Okay. So we're being very patient, but on the way up, I want to also point out, notice when we tag the 50, we have some rejection. We tag the 618, we have some consolidation. So these fibs are going to work at least to give you some scalpable plays. And if you go into ES, you probably see this better. Let's go to ES because it'll be easier to see this just because it has the full data. So let's go to ES and let me do the same thing. So from here, swing high, swing low. Let's go back to the hourly. Okay, so here we go. So it's a lot clearer in the ES because there's no breaks in the market, right? So actually, let me go down to a 4 hour so that it's a lot easier to see. Okay. All right. So what happens here? So this is the first leg, the retracement. Look at this. We have a double top on the 50 over here. That's a scalp. We have another attempt on the 50, another drop. And then this time we pull through the 618 and the 786. But look what happens when we get to the 886. We have that random doji just sitting there. And everybody at this time is looking back and saying, man, the market is going to break out. It's going to explode, right? But a very professional Fibonacci trader would know that this is a good risk to reward opportunity for me here. This is the last line of defense for the shorts. This is the last Fibonacci level. So how can you trade this to make exceptional profits? Well, instead of risking off of the weekly chart, we can go down to this hourly chart and say, okay, I'm going to try my money on this doji. So right below the low, I'm going to enter the short. I'm going to put a stop right above the high because I know that this is the last line of defense. And now let's take it back down to that 236 area that we talked about. Boom. So that's 12.5 hour. Okay, so that's how you use time frame alignment to make massive profits. So 12.5 hour, if you're risking $1,000 a trade, that's 12,500. You know, if you're risking 100, that's 1,250. So it all depends on your account, but 10 times your money, if you do that maybe 10 times in the year, you're golden. You can lose every other trade after that and still make money. So that's how you combine the time frame alignment with the micro, with the macro, in order to really capitalize on these fibs. And I really wanted to show you guys that it's happening all the time on all the time frames. And if you can really become a master and sit down and appreciate and study the fibs, they're going to be a great tool in your trading career. So in the next videos, we're going to look at how to actually execute them, like in terms of limit orders and stop losses and things like that. So if you guys are want to hear that and you're excited for it, show me some love. Please comment, like, and subscribe. I'm hoping that this is adding value to your trading career. Okay, thank you very much and enjoy the rest of your day.